All right, let's jump right in. Today, we're tackling a very specific but really crucial piece of the GST puzzle, Form GSTR-11. If you've ever wondered how international organizations get back the GST they pay here in India, well, you're in the right place. We're about to crack the code.
So picture this. You're part of a foreign embassy, maybe a UN body operating in India. You go out and buy some supplies, and just like everybody else, you pay GST. But here's the catch. You're not a typical business. So that tax you just paid, how do you get it back? That is the exact question we're going to answer right now.
So that brings us to our first section, the GST refund puzzle. And it really is a puzzle, because the normal rules of the game just don't apply here. You see, for any regular company, the process is pretty straightforward. They use something called input tax credit, or ITC, to basically balance out the GST they've paid with the GST they've collected. It's a core part of how the whole system works, for businesses. But what happens when you're not a business at all?
And this slide right here shows you the fundamental difference. A normal business uses ITC to handle its tax liability. But a UIN holder, that's someone with a unique identity number, well, you don't have a business, so you don't have a tax liability to offset. Your goal isn't to balance the books, it's just to get your money back. And that's exactly why this special process exists.
Okay, so we've got a puzzle on our hands. So what's the solution? Well, that brings us to Section 2, your key, GSTR-11. Think of this whole thing as a locked door, and this form is the one and only key that's going to open it.
So what is GSTR-11 exactly? It's basically a quarterly statement. It's where UIN holders officially declare, here's what we bought and here's the GST we paid on it. It's the official record that makes you eligible to even ask for a refund.
Now, just to be crystal clear, this form is only for organizations that hold a unique identity number. We're talking about foreign embassies, consulates, UN bodies, and a few other specific international organizations. This process is not for regular taxpayers or businesses.
All right, now for my favorite part, a feature that's a massive time saver. Let's talk about the magic of auto-drafting. This is where the GST system really starts working for you.
So how does this magic work? It's a super simple three-step dance. First, your supplier files their sales return, their GSTR-1, and they make sure to include your UIN on the invoice. Then you log into the portal and click one little button, Initiate Prefill. And bam, just like that, all the invoice details are pulled right into your form. No more tedious typing.
Here's what that actually looks like. Let's say an organization like UNICEF buys something from a company called ABC Private Limited. As soon as ABC files its return, this exact data, the supplier's name, the invoice value, and that 18,000 rupee GST amount, it will all automatically show up in UNICEF's GSTR-11, all ready to be reviewed.
But hey, magic doesn't mean you lose control. Not at all. The system does the heavy lifting, but you have the final word. If you spot a mistake or maybe an invoice that shouldn't be there, you can easily edit or delete the details before you file. You are always in the driver's seat.
Okay, the data's in, it looks good. You're almost there. This brings us to Section 4, your final checklist. This is the last hurdle you need to clear before you can kickstart that refund process.
Let's quickly run through some key filing facts. First, you file this quarterly. Now, there isn't a strict due date, you just have to file it sometime after that quarter has ended. And here's some good news. If you didn't buy anything in a particular quarter, you can just skip filing. No need to file a nil return.
But before you hit that file button, I need you to pause. Take a breath and double-check, no, triple-check every single detail. Why? Because
this is probably the single most important thing to remember about this whole process. Once you file GSTR-11, it's final. It's locked in. It absolutely cannot be revised. So any mistakes you make are permanent. You have to get it right the first time.
Okay, so you've been careful, you've filed it correctly. Now what? Let's move to our final section and look at the complete journey from filing this form to actually getting that money back in your account.
This timeline really gives you that bird's eye view. It all starts with your purchase. Then your supplier files their GSTR-1. You use that data to file your GSTR-11. And here's the linchpin, Step 4. Filing GSTR-11 is what enables you to then file the real refund application, which is Form RFD-10. After that, the department processes your claim and you get your refund.
So if you remember just one thing, make it this. GSTR-11 is not the refund application itself. Think of it as the mandatory first step. It's the key that unlocks the door. It's the document that proves you're eligible to even ask for a refund using Form RFD-10. No GSTR-11 means no RFD-10, and that means no refund. It really is that simple.
And there you have it, the puzzle, the key, and the complete journey to your refund. Now you know exactly what GSTR-11 is, why it's so critical, and how it all works. So the only question left is, now that you have the key, are you ready to go unlock your next GST refund with total confidence?